Uh, Welcome to another edition of Maritime Gateways Digital Dialogues. Today we have a guest who needs no introduction, Mr. Dhruv Kotak, the most charismatic, dynamic managing director of 104-year-old India's logistics, services and transportation conglomerate, Baxi Group. Welcome to this show, Mr. Dhruv Kotak.
Thank you so much. Pleasure to be here, sir.
Uh, Let me begin by asking you, which is very passionate and very interesting for you. You have, in fact, activated PCS with PCS 1.x through portal much before COVID-19, and now I see the entire gamut of our industry talking about digitalization, and I believe the user base has grown multifold in the last few months. So how do you feel now, and what lies ahead?
I think, sir, first of all, thank you. And the PCS initiative, first of all, is an initiative taken by the Ministry of Shipping and the Indian Ports Association. I think that's their vision and their initiative. We are largely a technology partner and a solution provider. So first of all, I think the vision of digitizing India's sort of maritime space, I think, is one that belongs to the government and to the Ministry of Shipping. They deserve the entire credit and the entire relevance for the same. This is all thanks to them. This is something that they have put into place. This is something that they have single-handedly achieved. What I believe has happened during the COVID period is that I think there has been a very stark realization that the need for digitization is not only for a fancy word. Like in the old days, it was like everyone was talking about digitization because it looked cool. You saw various sectors moving very rapidly towards digitization, and we felt that we needed to be in the same course. But sir, I think more than that, I think people have now realized that the utility of it. So we always knew that there would be a reduction in transaction time and cost. But I think that realization has now become that it has become a necessity, because the moment you saw the impact of COVID, you saw that documentation exchange physically had become very difficult to do. Offices were not functioning, like ours is still not fully functioning. People were not able to go out freely onto the roads, onto the streets to, go and collect documents, to exchange documents, do banking work. None of this was possible. So I think keeping that, sort of perspective in mind, I think looking at what COVID did is, I think it hastened that transition towards digital. All the stakeholders became, I think, very aware that this is something now they can't do without. And as they started adopting more and more digital practices out of a need-based, I think the realization has started to come that it can also lead to massive cost and time improvements, which was the original intent. So I think that's really what has happened, sir.
So you think that now it is more acceptable, and people are showing interest to log on to this platform?
No, I think across the board. In fact, sir, I would say one was always the maritime stakeholders, the community holders, which is what a port community system, which was largely the ship agents, the shipping lines, the port themselves, the customs, maybe to extend the CHAs. But now what we are seeing is that a lot of the importers and exporters and the direct end users have been impacted. And because they have been impacted, now they are actively looking for more and more digital solutions as a part of their overall ecosystem. So I think this is a huge change, where I think the awareness of what is possible digitally in an EXIM supply chain, that awareness has spread beyond just our core industry, the maritime industry, into actually the end users, where they are becoming more aware and they are demanding this, because they have realized what that disruption can mean to their supply chain, which is far more costly, by the way.
Portal had a lot of tie-ups, collaborative efforts recently, like CargoX, Cocon, and return tracks and all this. So what does all this mean for end user?
I think what Portal is doing is through it's developed a collaborative platform. I won't go as far as saying marketplace, because I think to create a proper marketplace, I think a lot more initiatives and time will be required. But I would say it's created a collaborative platform where we have seen over the last couple of years there have been multiple solution providers who are providing some very quality solutions, but all of them are in isolated sort of silos. So all Portal is doing is that using its experience from the port community system to try and bring together as many solution providers onto a platform and make it available to end users to choose either isolated solutions that they may require, or then combine these different isolated solutions and try and get a complete suite of offering or a single digital solution. So the idea really is to bring more and more digital entrepreneurs onto a platform, enable them to really provide a top quality solution for the end user. So I think this is something which is I think been the goal for Portal, and I think we've been able to achieve that in I would say in a small measure with the Picasso solution that we put into place.
Recently, I was talking to a group of tech solution providers. So the question came up is, one is we need a standardization in our solutions, and second is we'll end up by generating huge data, terabytes of data. So how do we leverage that? These are the two things I think going forward will be staring at us.
I think, sir, I couldn't agree more with I would say both the opportunity and the concern with what you have just pointed. I think that's a very, very valid and very serious, I would say, area. So first, let's take standardization. I think, first of all, I think standardization of data, types of documents, these are going to be absolutely critical. Until there isn't a standardization of data sets, data forms, and more of standardization with regards to that, I think it will be very difficult to create a common, I think to create any form of data scalability, because otherwise we will all be again working in more and more silos. So that's one. I think just taking an extension of that further, sir, is that we will also have to make sure that all of that data will have to come and start finding itself into certain common platforms. And this has to be the initiative. Maybe government can nudge, and I think the word is nudge, private, various private enterprises to access and share data through certain common platforms. I think they are trying, the government is very actively trying that with the port community system, with the national logistics platform. I think they're doing a lot of work around that. I think it is a matter of standardization and single platforms, adoption of them to create scale. And then you're talking about terabytes of information, and then how that is harvested. I think, again, how you use that data, how you anonymize it, how you set the standards for it, how you collect it, how you set very strong rules with regards to privacy, because you also don't want to create unfair advantages for so-called gatekeepers. You also want to ensure that this data, even if it is being held by government, is completely anonymized before sharing, but you still have to share, because unless that data is not useful and is not being accessed by a larger number of stakeholders, I think the value of that will get lost, and I think that value for all of us as a nation and all of us will get lost. So I think we will have to make sure that all concerns of privacy are addressed, standards are maintained, a single platform is created, or single platforms are created from which this data can be accessed, then scaled up, and automatically you will see new business models emerging, efficiency emerging, tools emerging, companies becoming, I would say, far more efficient than they have been so far. So I think it's a step-by-step journey. Again, I think the government has a huge role to play, but I think they've already recognized this and they are playing an active role towards it. So I mean, again, here I'm a big backer of steps that the government have already taken. I think now it's up to a lot of us in the private sector to make sure that we, I think we collaborate. We believe what the government is sort of doing is in our best interest, and we collaborate and we start contributing as a community.
Let us move a bit away from technology and but let's talk about business. And last few months, the COVID impact has been on every business, both in India and globally. So, how is JM Baxi taking that impact, and what are the significant things that you have noticed in business?
So I'll reverse back a little bit. I think the COVID journey for us, like any other exim player, I would say began in full earnest, probably end of January, first week of February, because you had impacts in the Far Eastern countries. China, of course, was very badly impacted then. You had Korea, you had Japan also starting to reel under some of the strains linked to that. So we started seeing impact already in terms of volumes in February. And I guess we had a bit of a head start in terms of awareness that this is soon becoming a global challenge. So I would say early part of March, we had already put in very strong business continuity programs. And again, because of our large exposure to the technology space, we already have a very strong remote working capability. And this is not something which was new. This was something that we had a long time back. It was just a matter of completely activating the human element for that remote working and business continuity program, which we put into place, I would say about a week or 10 days prior to the actual official lockdown. But I think the real challenge for us then started after the lockdown, where we experienced in our terminal business, our logistics businesses, obviously various, even our ship agency businesses, various restrictions in terms of for people to get out of their homes, to access the facilities. Labor became a challenge. A lot of our blue-collared brothers and sisters who work in our workforce, and that's a large part of our workforce. They were impacted in various places. Drivers were in short supply. Now, just to put it into perspective, before I talk about our performance, I think what COVID did for us was made us come to a very, very honest and stark realization that in the end of the day, we can talk about large amounts of capital spend, capacity creation. We can talk about technology. We can talk about phenomenal processes. We can talk about growth. But in the end of it, in the core of who we are as JM Baxi, we are a cargo handling company. And we are a people business, and more importantly, we are a blue-collared business. And I think this is very different from maybe the thought process that we ourselves had about who we were prior COVID. And that was a very humbling, I think, realization. And I think COVID has drilled that into us in a very strong manner. That I think we take our blue-collared activity and our blue-collared roots, I think, very seriously. And I think we will not, we will make sure that that's an area which remains strong. It remains controlled. It remains an area where we continue to focus on to make sure that productivity, efficiency, but also that our, blue-collar brothers and sisters who are there in our workforce are able to, remain productive, remain efficient. They're able to, access their work, have access to, amenities which, they have every right to. So I think this is, I would say, one big learning for us. But I think, again, a compliment to all my colleagues, the 3,000 of them who are on, who are the white collar workforce that we have, 15,000 who are our non-white collared workforce, blue collared workforce. I think full compliments to them. I think JM Baxi has had a remarkable quarter, a COVID quarter. We've actually performed very strong. April was obviously a weak month, but I think our recovery in May and June and then onwards in July has been, I think, tremendous. I think on a year-on-year basis, we actually grew in the quarter. Now, that's also because of the fact that a lot of our assets maybe have a lower base compared to our larger competitors. But we also do deal with a lot of commodities which are very basic in nature. So which is, metals, steel, pig iron, agricultural produce, fertilizer. And these basic commodities, I think their movement had become stronger during this lockdown. Exports have really picked up. So I would say, in a sense, again, we have to, thank our workforce. We have to thank our stars. We have to thank the, our ministry. We've had a remarkable quarter. We've also had a chance to, really contribute to far broader issues that were affecting our sector. We were able to contribute to about 15,000 crew changes of Indian crew members, which is almost 60 or 70% of the total, maybe more of the total crew, Indian crew that are sailing abroad on ships. And that we consider that a massive privilege that we could be of service to, our brothers and sisters who are serving on ships in different parts of, in different ships, different shipping companies all around the world. We were also able to use this period to, work closely with the government for, as you asked, sir, digital bills of lading, further extending the scope of the port community system, digitization. It was a blessing and a privilege to do that as well. So I would say, sir, the impact has been, I would say has been positive, because I think somewhere down the line, COVID has, I think reaffirmed what we were doing in certain areas, that we are in the right direction. But I think on certain areas, it brought us back to our roots, got us focused on basics, which is what I think really drives our industry and our sector, sir. So I think, for us, I would say overall, COVID has been a tremendous learning. While I don't believe it's over yet, I think we will come out of this stronger, not necessarily only financially, but I think we will come out stronger in terms of values, principles, in terms of just the way we conduct our business, which is, I think, for us, it's a big plus.
That's wonderful. Corona positive is not a bad word for you. Okay. But recently I have seen a phenomena that Concur shutting down some of their units, a large eastern port selling off its assets, and another shipping company selling off its coastal services. So, as a large player, what do you think is happening to the Indian maritime landscape? How do you see it?
I think that, there are definitely challenges, and sorry, I think, sir, I will correct your statement, sir. I don't think we are large, and I would say we're more of a medium-sized player, and proudly medium. But sir, I think the larger, no, sir, but I think larger the players, I think their spread, their base ends up being larger, and therefore the impact that that they would end up having can be more severe. Also, sir, a lot of the more advanced locations, especially in places, sir, which are far more developed, you have a greater focus on imports and exports on items which are more towards consumer items, automobile sector, white goods sector. So these segments are far more impacted than some of the basic commodities where my smaller terminals or our smaller terminals are based. So I think definitely the landscape is definitely affected. I think a lot of plans in terms of growth will get shelved. I think a lot of expansion programs will be slowed down. So which is a tricky phenomena, because on one end, sir, the government has ambitious targets on privatization, even in the major port space, minor port space. I think there will be a little bit of a reset. There will be some slowdown on that. But having said that, sir, there are still, when I look at the landscape, there are companies that are extremely strong, extremely robust, international names who will continue actively pursuing opportunities in the Indian landscape to try and see how they can consolidate, add more assets. But I think there will be a tinge of caution because I do believe that there has been a substantial drop in the first quarter. And unfortunately, it's going to go on to the second quarter. Recovery is not, in our space, especially in the container space, frankly, across the board, it's not as quick as we were hoping it to be. So we were hoping, sir, that the first quarter would be the real hit and the second quarter would start seeing recovery. But when I talk about the Indian logistics landscape, the EXIM logistics landscape as a whole, sir, unfortunately, I'm sorry to say, I think it's going to take us 2 quarters as an industry to see that type of recovery, which means that if you're talking about half a year of business being impacted, I think that will have a significant impact on the landscape. You will see plans being shelved, slowed down, capital programs definitely being slowed down. I think, here the one credit I can give again is to the government. I think the government is very sensitive to this. But on the same end also, I think they are actively trying to make projects more and more attractive, even in this difficult environment. So I would say that's broadly, sir, my take on the landscape and how it's emerging.
I've seen reports that you're looking for equity funds to the tune of $150 to $200 million. What do you need the money for? What are your plans?
I think largely for us, sir, the plans have pretty much remained unchanged. We've been in the market to try and, increase our capital base, and I'll answer what the requirements, what the requirement for that capital base increase is. But I would say we've been in the market for about a year now. We were I would say largely concluded in terms of our transactions probably in the month of March, and I think March 2020 is a red checkered day for the world, because I think COVID really sort of burst out. And obviously, any transaction which we were hoping to have consummated or concluded in March has gotten pushed back. I do believe it's keeping in mind COVID and keeping in mind the overall appetite globally in terms of transactions. I do believe there is a healthy appetite, but I do believe that there is still a lot of uncertainty in the world, and therefore I think by the time we are in a position to actually execute a transaction on the equity space, I think probably we would have been delayed a year. So I would say outer limit probably towards March, towards the end of this financial year, is when I think we should be in a position to probably consummate that transaction end to end. I think that what we were looking for back then and what we are looking for now is pretty much the same. I think we're a medium-sized player, sir. We have enhanced capacity in all our facilities over the last 5 years. It's been a very successful capacity increase phase. I think last 2 years it's been about making sure that those capacities settle down. You are making sure your capacities are filled up. You're consolidating, and I think what we were hoping to do is a twofold. One is to make sure that we de-lever our organization to even lower levels than we currently are. We are already probably at a ratio of 2:1 on a debt to EBITDA ratio. Debt to equity would be significantly lower than that. But I think we want to be even lighter as far as leverage is concerned, with the purpose of having the ability then of consistently looking for opportunities. We don't see them yet, but we do believe that these opportunities, the government and I think the overall sector will present over the next 6 months to probably 24 months, 36 months. I think you will see that, and I guess that's the reason for the fundraise, the ability to try and keep adding more and more capacity to meet our I would say customer requirements. In the end of the day, as an organization, our customers are also growing, and if we are not equipped adequately to meet their requirements, I think we will be doing grave injustice to ourselves and, frankly, to their ambitions and their targets as well. So I would say, sir, really, it's to organically, keep enhancing our capacity to meet customer requirements, and that's the prime purpose of the raise.
So these opportunities, a while ago, you were looking at expanding to South Asia and beyond borders. So they are still on.
No, I think so. I think South Asia definitely remains a priority area as far as we are concerned. I think what I would just probably add to that, and maybe slight difference, would be that, sir, I actually believe that India post-COVID specifically is going to grow a lot. We are going to be very well placed to, as an economy, to really. I think the recovery is going to be V-shaped. Maybe a little bit longer than we had hoped in terms of what this lockdown and bottom was, but it is going to be a rapid journey from there onwards, and I think keeping that in mind, the only change which I foresee is that our focus on India is going to have to double. Our commitment to India is going to have to double, because I think that while I do see great opportunities, and we've discussed this in Bangladesh, in Nepal, in Sri Lanka, sir, I do believe actually that India is got a lot more things to be done in our space. So while I'm excited about South Asia, I think first I'm doubly committed to making sure, sir, that we meet our customer requirements here in India adequately first, because I think there are going to be a lot over the next few years to come, sir.
Thank you very much for Dhruv Kotak for that very optimistic thoughts and sharing your perspectives on industry and your company as well. I wish you all the best in your initiatives and for the group as well. Thank you very much for joining us. It was a very exciting conversation we had.
Thank you, sir. Always a pleasure. And please stay safe and stay healthy, sir.
Yeah, you too. Take care.
Thank you, sir.